Yes, children, back to the class again. We are actually discussing financial market chapter and we are in steps, the trading procedure. What all are the trading and the settlement procedure in financial market? Last we studied the trading and settlement procedure. We said it is a T plus 2 methods we are following. T plus 2 method. Okay, so that means when a security is bought or when it is sold, all the transactions, or let it be a purchase or let it be a sales, it should be settled within 2 days of time. That is called a T plus 2 pattern. Okay, this is called a rolling settlement. The settlement is called a rolling settlement of stock exchange. Remember that. So now we are proceeding to the steps. What all are the steps followed in this trading of trading means it can be purchase or it can be selling of financial securities. Let it be equity share, debenture, bond, whatever be that. So first step is actually we need to select a registered broker. A broker has to be selected. He should be a registered broker, means he should be a valid person who already having required knowledge, required expertise in this procedure, in the trading procedure or shares or debenture. After that, we need to open a demat account that is called a dematerialization account. This has to be opened with a depository participant. As I said, DP, we used to call it as DP, depository participant. Depository participant is actually an institution. It's an organization that is mainly dealing in financial securities, financial instruments. Basically, in India, we have two depositories. They are NSDL, National Securities Depository Limited, and we have Central Depository Services Limited. These two are the major depository participants in India. Of course, other than that, there are many. So, but these two are actually popular. So we have to open a demat account with the depository participant. After that, once the demat account is opened, we can give or we can place the order either for purchasing of a particular share or security, or we can give an order for selling any particular security. And this order we have to give to the broker. Okay, let it be for purchase or let it be for selling. This should be given to the broker. Once the order is placed, the fourth procedure is actually execution of order. Broker will execute that order through the computer terminal. We already said that everything happening in the stock exchange is now through the computer. Okay, it is through the computer only, electronic media only, everything is happening. And after that, once the order is executed, then we have to the delivery of contract note means the broker will pass a contract note. He will submit a contract note to the investor for whom he did the operation. Contract note means it's just like a bill, children. His invoice he will give, like what all are the securities he bought or sold, what is the rate in which the deal has been made, how much is his brokerage. All these information will be mentioned in that contract note, or it's actually a bill. It's like an invoice of a broker, but we used to say the term contract note, children. After that, he will make some changes. Accordingly, he will make some changes in the demat account. If it is purchase, means he will purchase it, or he will sell whatever share he purchased for us. He will make the changes, or whatever be the number of shares he sold for us. That also he will make the changes. And once uh, this all will be done after receiving the money. Okay, once the money is received, brokerage once we are releasing, that time only he will make these changes. Please understand that, children. So these are the 7 steps or procedure: broker selection, demat account opening with the DP, depository participant, NSDL, CSDL. Remember these names, children. We'll study about these in detail in the coming slide. After that, order will be given for purchasing or selling. Order will be executed through with the help of computer. Then the contract note will be delivered, and demat account will be accordingly changed once the money is received or paid. Now, what are the advantages of this online trading? Everything is transparent, children, nowadays. Before it was not like that. Before it was the we said no that trading happened inside the stock exchange. That ring, we said about one ring where people, brokers used to stand and they will do the outcry and all. Do you remember? So that area is called the ring trading, or that process was called ring trading. But now it is not like that. Everything is electronic, transparent. Okay, you can see everything, what all things are happening for your share, whether you purchased or whether you sold, what is the status of that particular share in the market. Everything we can know on real time basis. It's all efficient information only, children. Computer information is very much efficient. It's very transparent. It is all instantly they are giving the share prices and all. You can see the share graph here. It is actually showing what is the pulse, what is the status of a share on this day, what was the status on the previous day, and the predicted rate they will show. Operations are all very, very efficient. It reduces the time as well as the cost and the effort of the investors as well as the lenders, sorry, as well as the buyer, as well as the brokers' effort, their time, the cost, everything can be saved. Coverage is very wide, children. Nowadays people from anywhere of the world, they can participate in this trading activity. Let it be buying or let it be selling of the securities, they can just do the activity by sitting in front of a computer or there any other electronic gadget. They can do their activity. The platform is a single platform. Everything is actually, it's like a hub. Everything is well connected, all the areas are well connected. You can see here the inside part, we can say it's a stock exchange, or we can say that it's a major broker sitting with his device, and you can see a number of peripherals. These all can be the investors or the buyers. So he is well connected, single platform. So these are the advantages of online trading, children. Now proceeding, we already said about dematerialization and depository services. We'll see a little bit in detail. Depository, it's already I said it's an organization, it's an institution, children. Just like a bank, you can think, or it's like a financial institution, think. So what is their major task? Their major task is actually holding the demat account. Okay, they are actually opening or operating dematerialization account for the shareholders, where the securities will be held. There it will be stored in a digital form, electronic form. And as and when the people request, as and when the shareholders ask, they will pass it. They will share it through the broker. Okay. So it's just like how the money is stored, how the money has been held in a bank account. Like that, shares of the investors are stored in this depository. Okay. In this demat account, which is operated by a depository. So this is actually, depository system is actually one of the crucial, it's playing a very crucial role in capital market because they are only doing this paperless, scriptless trading. Okay, please understand, children. Before it was share, physical share certificate, but now it is not scriptless or digital. And you can see already we said the meaning of dematerialization. Please see that word once again, meaning once again. It is a process by which physical share certificate are converted into digital form and it is credited in the investor's account. Okay, that is a dematerialization process. Usually it will be asked for 1 mark only, children. Okay, it's an account where the share certificates are stored in a paperless form. 1 mark question can be asked, or even a case study can be asked from this area. What is in by demat and what is in by the depository? Usually, 1 mark question can be asked in a case study manner also. Okay, so when we need to trade in a dematerialized form, we need a demat account. Demat account can be opened in a depository. You can see the two name here. This is a logo of both NSDL as well as the CDSL. Organization that offer the facilities called a depository participant. Okay, we already said the company, the institution that offer demat account to a shareholder is called a depository participant. In India, basically there are the NSDL and the CDSL, and many share brokers, many share broking firm, many commercial bank are also nowadays acting as a depository participant. So the question can be asked, who all are the depository participant? In that situation, we can write two major name, NSDL and CDSL. Apart from that, you can write the names like share broker, commercial bank, etc. Okay, they all are acting as a depository participant. Now you can see the dematerialization process, children, starting from an investor. Okay, investor number one is that investor. Investor will approach a depository participant. Okay, the depository participant will intend, depository participant can be a broker or a commercial bank. Okay, or any institution like any brokerage institution, children, like Kotak Mahindra, Hedge Securities Limited. Okay, that is a number, second number, depository participant. Then from that stage, depository participant then will approach the uh, depository, or he can approach the registrar. Okay, as a third process, he will approach the registrar. From depository, it will be passed to the registrar. Okay, Registrar will in turn pass some information back to depository. Then depository will pass to depository participant. Again, depository participant will pass the information regarding the shares, or the uh, digital shares itself can be passed from the depository to the depository participant, that in turn going to investor. But here in between you can see registrar is also there. Registrar will be regulating the movement of the securities children. That is why it is mentioned there. So anyway, dematerialization process, they will not be asked. This part will not be asked, but please understand. Investor will approach a depository participant. Depository participant will in turn approach a depository. Also, it is routed through the registrar. Okay. From there, again, the depository will pass the required share certificate or whatever be that to depository participant, and depository participant will give this to investor. That is it. So this is the process, children. Investor is surrendering certificate to the depository participant for share dematerialization. Means the original share certificate usually will be converted in the dematerialization stage, isn't it? Then the DP will inform the depository. The depository participant will inform the major depository. Okay, that is actually NSDL or CSDL. Okay, it will be, the information will be passed through electronic media. So the depository participant will send then the original certificate to registrar for verification and cancellation. That is why registrar is mentioned there, children. So the share certificate, whether it is valid or not, who will verify it? The depository participant will verify it by giving this to the registrar. Okay. Then the depository will send formal request for dematerialization to the registrar. Once the registrar says that this is a valid certificate, then this will be converted to dematerialized form. Okay. After that, registrar will inform the depository for cancelling the certificate and giving electronic credit. The physical share certificate, if is there, means it will be cancelled. Who will say the information instruction to cancel? Registrar will inform to cancel. Then it will be converted to credit, electronic form, so that the share certificate will be credited. Just like money is credited in bank account, like that the electronic share will be credited in customer's account. After that, depository will update this account and he will inform the concerned depository participant. Depository will update about these things. Depository means NSDL or CSDL will update these kind of information about the demat account, children. And then they will inform. Actually, this is being informed to the depository participant. Depository participants are broker, commercial bank, or firms like a Hedge, Kotak Mahindra, etc. After that, this Kotak Mahindra or Hedge or any other commercial bank or any other brokerage firm, which is called a DP, they will inform the customer about the credit in his account. This is the procedure, children. This is the procedure of a dematerialization. Okay. This is the major diagram. Then it is being explained here. Okay. Then we are proceeding to the major stock exchange in India, which is the National Stock Exchange, established in 1992 only in Mumbai. This is actually established with the help of a life insurance company, general insurance company, and some commercial bank, and along with other financial institution. Their paid up capital was actually 25 crore. They are nationwide, it is there. The coverage is nationwide with the help of satellite and all. We have almost 6,000 trading centers in 370 cities of India. Everything is happening online, children, electronic trading system only. Okay. So that is well understood that everything is happening electronically and everything is transparent. All the dealings in National Stock Exchange is actually transparent. Okay. Investors can see what is all happening. They can verify the rate in which the trading is going on. Everything they can check. Actually, the orders are actually matched easily. The orders will be matched with the help of computer. Order matching means I am a person who is selling my share or my debenture for a particular price. There will be another person in stock exchange who will be ready to buy that share or debenture for that quoted amount. So our deal will be matched. Okay, that is called a matching of buying and selling. It is done with the help of computers. Then we already said every trading happening is in a dematerialized form, and that is a T+2 basis. That is a rolling settlement basis, children. Okay, so these are the features, or we can say these are some of the objectives of a national stock exchange, right? So we have a wholesale debt market under NSE, and we have a capital market segment also. So wholesale debt market is actually trading in securities like commercial paper, certificate of deposit, treasury bill, public sector undertaking bond, etc. So they are mainly focusing the debt securities, children, which is under NSE. Okay, all the transactions are done normally in wholesale. That means it is not in a lot basis, high value like a money market. Okay, wholesale basis. Individual brokers are not permitted in the debt market, which is under the National Stock Exchange, children. And then we have a capital market segment, that is like a retail market. Shares, individual customers can go and buy. Individual brokers are allowed there. Shares and debentures are usually traded there. Usually, the shares or securities are traded in lot form. Okay, one lot, two lot, like that. Okay, companies that are having a minimum paid capital of 25 crore are allowed to list in stock exchanges, children. And almost every time 700 securities are listed. Okay, so that is all with the NSE. NSE's features and objectives we discussed, and after that, uh, we are actually discussing the segment. What are the two segment of a national stock exchange? So that also we discussed. Once it is over, we will see the we are going to see the Bombay Stock Exchange, yet another stock exchange in India, BSE. Okay. So that is actually located in Mumbai, which is the capital city. This is the picture you can see here, BSE. Okay. When we are talking about the NSE and the BSE, you should also know about the share market indexes. Okay. BSE has a particular index, okay, that is called the Sensex, and NSE is having a share market index called the Nifty. Nifty is a combination of a 50 highly performing companies of India. Nifty 50 we used to say, and the Sensex. These two are important indicators of stock exchange. How good the companies are performing, how good the highly performing companies of India are performing on one day. Like that, they will show the information. Okay, so BSE is actually the oldest one when compared to NSE. NSE established in 92, but this is in 1875. It was a voluntary non-profit association that time, oldest in India, sorry, oldest in Asia, first in India, or we can say that is the first recognized stock exchanges by Government of India, and it is the one which is a registered, permanent registration is there, children. That is why we said one point of stock exchange meaning. When we discuss the meaning of stock exchange, it is an institution either incorporated or not, established for the purpose of assisting, controlling, regulating the needs of investors and buyers. Do you remember that meaning of stock exchange? It was actually here. I'll tell you where exactly it was. So that only here mentioned. Okay, it was actually long back, children. Just wait, I will show you the meaning of stock exchange. We have discussed it long back. Yeah, here it was. It is a body of individual, whether incorporated or not, constituted for the purpose of assisting, regulating, and controlling the business of buying and selling or dealing in security. So that was actually mentioned here. BSE, we were discussing about BSE only. Bombay Stock Exchange has been given the permanent registration. Okay. Now this is a premier stock exchange in India. That is one of the best trendsetter. Companies having minimum 10 crore paid up capital can list in BSE. Every day almost 6,000 shares are listed. Okay. Securities are basically classified as A class security, B class, T and Z class. Group A are actually, we can say blue chip companies share having good track record, and it will be traded in huge volume. Usually trading before and all, before the advent of computers and all, outcry was the system. Now everything is actually online trading. 1995, Bombay Stock Exchange started the online trading, that is called BSE online trading, or we can say Bolt. At present, this Bolt is actually operating nationwide. Okay, it is actually operating nationwide all over the world. Bolt is actually happening. Now we are entering into another area, children. After BSc and the NSE, we are going to study what is meant by the SEBI. We already know about SEBI. We studied many times, or we heard the term many times. Securities Exchange Board of India, SEBI. So this is also established in Mumbai, just like Bombay Stock Exchange. It is one of the watchdog. We used to say SEBI as a watchdog of capital market, or watchdog of stock exchange, preferably we can say. Started in 1988 April. It is an organization established by Government of India, basically under the recommendation of a committee which was headed by G.S. Patel. So this, though it started in 1988, it has been made as a statutory body in 1992. That was actually because in during 1980s and all, capital market or the stock exchange has witnessed a tremendous growth. People were actually demanding, or they were actually ready to give their money for companies, for buying share, for selling share, for buying debenture, for selling debenture. They were totally interested in this kind of investment pattern. And also what happened, because of that, lot of malpractices happen in India in the stock exchange, mainly done by company, mainly done by brokers, mainly by the merchant banker, by some investment consultant. They all did lot of fraudulent activity. Because of that, huge losses started. Huge loss happened to company. Huge loss started to uh, started for the investors. So they lost their confidence in this segment itself, not in money market but in capital market. Capital market is again divided as primary and secondary, and this loss and this kind of fraudulent activities are was basically happening in the secondary market, which is the stock market. So because of that, government wanted to start a regulatory body. That is how the SEBI has been established. So these were the some of the common malpractices that were happening in India that day. It was actually, we can say, merchant bankers were doing fraudulent activity, unofficial private placement. Private placement means giving shares to some individual institutions. Intentionally, they were giving to private people rather than giving to bulk public. Price rigging, unofficially, what they are doing, price rigging is actually inflating the prices of some company's share, artificially inflating. Then unofficially, they will give some shares on premium price. uh, share market or the brokers were not following the provisions of Companies Act. Hmm? So these were actually insider trading was going on, children. Insider trading. Insider trading means those who are working inside a company. Okay, they will make uh, huge profit by way of selling the share, because the insider people, they know what is going to happen in a company, children. They know what all information, all the secret information they will come to know first about the share price or about the new issue of a securities. Everything the insiders will come to know. So they will play so that they will earn more profit. This is called insider trading. So these all are actually the common malpractices happening in stock market during the 80s, early 80s or 90s, violating the rules and regulations that were prescribed by stock exchange. They used to violate. Okay, so it can be regarding listing formality, it can be regarding printing of prospectus, malpractices in printing prospectus, unwanted information, unnecessary information giving in prospectus, hiding some information in prospectus. Okay, so these all are the common malpractices. Okay, this can be asked as a short question also. What were the common malpractices, children? Okay, so you should remember price rigging, which is artificial inflating of prices by a certain group of people for a certain shares, especially highly performing company share. A category shares were rigged. Then unofficial premium will be given on new issue. Share price will be increased unofficially without informing to the uh, class of people, without informing the board of directors and all. They used to share, they used to sell the shares in premium. Okay, then this insider trading, these all were the common malpractices. So because of this, SEBI has been constituted by Government of India mainly for the purpose of providing a favorable condition, favorable ambience or environment to the investors so that a huge amount of money, the finance can be allocated properly in the securities market between the investor as well as the buyer. So this is actually established for the purpose of fulfilling the need of basically three group children. One is the issuer. Issuer means the company whoever issuing the security. Okay, so it will make a fair market. SEBI will is actually ensuring a better marketplace where a company can issue their shares in an easy, fair, efficient manner. Then this is actually helping investors. A lot of protection will be given. Their rights will be protected. They will be protected against all the fraudulent misappropriations that were done by the brokers as well as the company. Then this is also helping the intermediaries, the brokers. Okay, usually they will be given a lot of information to brokers. Also, they will give some training. They will give some developmental classes, some uh, training session. You can see here these name: Angel Broking, Kotak Security, Zerodha, Sharekhan. Zerodha is one of the best share broker in India for your information. Okay, Edelweiss, Motilal Oswal, SBI Cap we have, Angel Broking we have, Reliance is there in securities. These all are brokers children, intermediaries. Or remember, these are the depository participants children. Remember, Kotak Mahindra, Zerodha, these all are actually depository participant. Okay, we can see a lot of videos regarding the Zerodha and all. Many people are in teaching the mass, the public for Zerodha, even angel broking, etc. So these are the purpose for which the SEBI has been established, or the role of SEBI, watchdog. They are preventing malpractices, they are protecting malpractices, they are actually helping the issuer, they are helping investor as well as they are helping the broker. Now the objectives are actually, or we can say the functions of SEBI. This question usually they will ask, either they will ask about regulatory function or they will ask about the developmental function, or they will ask about the protective function, regulatory function, and the developmental function. So we will see all those things. So they are basically established for regulating fair trade practices in the market. Also, they are established for protecting the right of investors as well as the brokers, as well as for the company, so that the steady flow of money will be ensured in the capital market. Then preventing malpractices, then developing a code of conduct. Okay, some kind of code of conduct we have to follow in the stock market. Okay, either for the broker or for the merchant bankers, etc. So these are the functions. Now we will see that what all are the functions of SEBI, or objectives of SEBI: regulatory function, protective function, and the developmental function. So PRD, this part we will discuss in the next session, children. Okay, protective function, regulatory function, and developmental function. Okay, children. Thank you.